following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
Yeah.
holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's not a TGIF, folks, but we are going into 2020. You got to love it, man. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your intent will always be manifest through the word. What you dream, what you feel, and what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials down 152, NASDAQ off 54, S&P's down 13. What you really have out here, you have a down market, folks, really sideways, light, lower prices. You have light volume. Bottom line, you get holiday trading out here. Gold contract trading flat at $15.18 an ounce. We have silver up 2 cents, trading $17.96 an ounce. Light sweet crude flat also, $61.57 a barrel. Notes and bonds. Now you had both the note as well as the bond market. They both rejected lower price once again. Pretty amazing. They want higher price, lower yield. You had the 10-year out here. We're down 3 ticks right now, trading 128.17. The 30-year is off 21 ticks at 156.08. If we get over and we take a look at that 10-year first, what you're going to see is this. Bottom line, this thing traded all the way down to 128.05, and it just said, see ya, don't want to be ya. And it's not only just see ya, don't want to be ya. You get a buyer in here, and this buyer came in 10 minutes of 3 once again and unloaded, bought 36,000 contracts. It's a big number, folks. So this thing's going to probably try to get into flat or into the green. We go take a look at the 30-year. 30-year is the exact same type of setup. 30-year rejected lower price out here. Got down to 155.10. You're trading 156.07. You have lighter volume. Bottom line, same type of setup. In fact, if you go over to the TLT and you can put together the volume with the price, what you're going to see is that the TLT came down to the lowest swing point from last week. That had 6.5 million, you're doing 5.9. It's actually testing your November 7th, and that's the big downdraft, with 5.9 million versus 19.1. TLT traded to 135.66. Now you're at 136.68. Gold contract out here. Bottom line, you had strength inside the gold market last week. GCG. The dollar's getting destroyed out here, and that's what's going to be moving this baby. Bottom line, you're at 15.18 right now. Gold wants to make this run to 15.71. You're at the top of the consolidation. Bottom line, you had good volume as you were pushing up into that consolidation. I figure we're going to build a little more cause, and you're going to be up and at 'em. And it's going to be all about that good old U.S. dollar. So U.S. dollar, folks, this baby came down last Friday, 97.552. Now we're at 96.763. I suspect, number one, it's the 95 mark that wants to get tested first, the 95.843. But what is game now is that this is the first time that we did, there's 2 different things that happened in the dollar. It's the first time that we actually broke, I had 2 downtrends. I had 2 days down with conviction, meaning wide price spread, big action, and that was generated on the week of December 12th. We went up and tested last week, the week prior to that, and then blew apart again. Bottom line, if we go over to the euro, you're going to see what moved it. And the euro on Friday, big move, top of the consolidation. The top of the consolidation on the euro, 111 to approximately 112.5. We're at 112 right now. Had big price move. The euro looks like it's going to make the move all the way up to 114. Is actually going to be easy. It looks to me like we're actually going to be running, 115. You got 115. You got 118 game. The British pound had already broken its downtrend. Bottom line, that is off the lows now for 3 months. We are at 119. You're at 131. So this is it. So currencies are moving around very quickly, folks. S&P, we take a look at the S&P. We have the S&P out here is that you're backing down $1.54. You're at $321.32. You got light volume. You're backing into option expiration, which was the 20th. It's going to take a lot more than this type of selling to basically break this uptrend that has been in play. Well, this particular uptrend here, it's been a one-way trade since October 3rd. And hey, John, can you, the back, I can't hear anything, okay? If you can fix the back of my chair, please. Some of the high volume equities out here. Let's go take a look at some of the higher volume equities. You get Advanced Micro is down 75 cents. You have Apple down up $1.50. Apple shook off, that was into lows out there. You got Roku down $8. We get Tesla is off $16.50. Still don't have it. The if we go take a look at Tesla first, we're taking a look at Tesla. Tesla right now, $413. That had a heck of a run. There's no doubt about it. Tesla had started off at $327. That was on December 5th and just went topside in a huge way. It made $435. Elon Musk was looking for $420, and he must have took a few more totes out of that and got that pipe fired up. He got something fired up and got it to $435. So big number, no doubt about that. Amazon had a huge run last Thursday. That's pulled back now $21. You went topside, broke the consolidation. The consolidation we're talking about goes all the way back to August of 2019. We get up to a price point of 1901.40, and bottom line is that you're pulling back with light volume. That's a break with conviction. And so the bottom line is that I suspect, once again, Amazon just laid there for 5 months. But guess what? It wants higher price once again. Now, Amazon's going to be coming out with numbers on January 30th. So we'll see where that shakes out. Facebook, we go take a look at Facebook. Facebook out here is trading down 330. No big deal there. That's light volume. Apple shook off the way down. Apple, bottom line, was down to 285 out here today. Shook it off. It's a 291.29 right now. And this thing's game once again to hit the top at 293. Stay right there, folks. Coming back when I'm man, Mr. Steve Rhoades. We're going to be talking markets. Dow Industrials right now trading down 158. NASDAQ off 55. S&P's off 13. We're going to be right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-48. Internationally at 727-873-7618.
Welcome back, folks. Dow right now down 146. You get the Nasdaq off 52, S&P's off 12. Let's go over to our man, Mr. Steve Rhoades, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve does an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, the way to get Steve's newsletter, you come over to our website at TFNN. You're going to go right under newsletters. You're going to see Mastering Probability right there. You can hit subscribe. You can get Steve's newsletter for 1 month for $149. You can get it for 6 months at $695, which is a savings of $199 at 22%. You can get it for a year for $1195, a savings of $593 or 33%. They all come with a 30-day money-back guarantee, folks. You get everything to gain, 0 to lose. Steve Rhoades, what's going on?
Preparations for New Year's Eve. Looks like you and I are going to be fortunate enough to have just some beautiful weather on New Year's Day. In the 70s, sunny. Sounds like a good way to start the new year to me.
There's no doubt, man. There's no doubt. This is when Florida, folks, for the next 4 to 5, well, the next 5 months to 6 months is the ultimate. There's no doubt. And you know, yes, you know, bottom line, we see all the snow across the country. Just jump on the plane and come on down. That's the bottom line.
Exactly. Yeah. You betcha. You betcha. Hey, I heard you talking about the U.S. dollar before.
Yes.
And I happen to have pulled this chart up because one of the listeners this afternoon to the show was asking about currencies, and so I didn't have enough time and said I would start preparing some information for listeners tomorrow.
Cool.
But since you were just mentioning the U.S. dollar index, I have one of the charts up that I like to take a look at. And this here shows the horizontal trading ranges. So in honor of Bud Rolfe, he's the one that taught us about these horizontal trading ranges. I automated that portion of the tool on my system. And what we're looking at is a weekly chart for the continuous contract for the Dow. Goes back 33 years. So we're back into 1986. Yeah. And these green lines show us these horizontal ranges that price can trade within. And so over the course of the last 33 years on a weekly basis, the level on a closing basis, the area that has the largest number of opens or closes is $96.72. And we're trading right around 96 42 right now. So prices, and so there's been 89 opens or closes, and we'll see whether or not this year it's a magnet to that level. If price closes clearly below this, and there's a little rising trend line out here where I would think that the U.S. dollar would potentially pull back to, and that's around 92-ish type range. But right now it's sitting here right at support. So since you just mentioned it, I said, and I happened to have it up, I figured, hey, we'd go take a look at it. But
Perfect.
2018 was a great year for me because I was recognized as the timer of the year.
Yes.
As you know, the nice thing is this has not been a one-hit wonder. So the Timer Digest information came out on Saturday. I'm still in the #1 slot through December 28th, but that's subject to change over the next couple of days.
That's
out
awesome,
here.
Steve. Oh my God.
Now,
I love it.
Yeah, the market actually selling off today, and if it does sell off tomorrow, because I'm not changing my bullish outlook, I could drop a place or so.
Oh, I see. Because you were neutral, now you buy. I got it. Okay, I got it.
Yeah, and so it's a day by day. But here's the thing. This is from the report that came out Saturday. I'm still in that #1 slot. And so the good news is and it's been basically for about a 2.5-year period of time. So what's great is that the tools, that I'm using, some of which were taught by you and Larry, Bud, we just took a look at one of his tools, have all assisted me. So we know 2019 has been the year of the bull worldwide. And we know that because I can go back here and take a look at from the beginning of the year, in essence, the last 12 months, take a look at different markets and how each of those markets have traded in different currencies. So I take a look at how the Dow is traded in U.S. dollars, in euros, yen, in pounds. Everything is spelled out right here. But in 2019, it's been the year of the bull market everywhere, whether some markets or areas better than other. In fact, the DAX in U.S. dollars has performed better than the U.S. Dow has. So what the point of this is that right now there's money that's flowing in to all markets across the globe out there, and that's really important. Versus if we go back to 2009 and we take a look at the last 43 quarters, the U.S. has been the big winner, gigantic winner. In fact, the Dow in euros is up 522%. Versus the Dow or the FTSE in euros, or the DAX in euros, up 120% or 282%. So there has been since 2009 a big concentration of focus into the U.S. But in 2019, that's not the case, and that's important for me in trying to analyze what may unfold here in the markets. And it's important, I think, for folks to understand the global flow of capital, because everything is connected, and the slightest change in any area can just simply set off a ripple effect. And if there's not a concentration of cash coming into one marketplace, then that ripple effect can extend to all markets out there. And I think that's really important for folks to understand. This here is an example, something near and dear to your heart. Here is a chart of gold. And if we take a look at gold moving into the 2011 top, these are the green arrows, and these show gold priced in U.S. dollars, euros, then yen, and then pounds out here. You can see that when any instrument is moving, you want it moving in the same direction in all currency pairs out here. That way, somebody who's trading gold that's sitting in London or sitting in Paris or sitting in Tokyo, you want everybody on the same page out here. And so that's really important to take a look at, because world capital is simply going to continue to flow between countries, whether it's Europe, North America, Asia, or different markets, whether it's real estate, stocks, bonds, or commodities out there. And so the real question is, will 2020 be the year of the bear? And for me, the market will decide for us, because I use a very set of specific patterns and tools that which include using bullish and bearish reversal signals to confirm patterns, such as the A to B equals CD pattern. This set of charts here, Tom, takes a look at the major markets across the globe through using the ETFs that are out there, so folks at home can do the same thing. So we've got the Dow in the upper left-hand corner. I've got the emerging markets lower right, and in between that, you've got Japan and Germany and China, India, and so forth. And no market has broken out even though there's been a bull market, as we took a look at across the world, no market has broken out other than the Dow above its 2018 highs. Those are the red lines across there. So we also have kind of a consolidation, in essence, going on across the globe. And the Dow, you mentioned, the Dow has been one-way market since that October 4th level. That's where the Dow was testing a breakout level. It's a Tom DeMark sequential, or Tom DeMark TD9 setup a breakout level out here, and so that was and that's important for folks to understand key levels of support out here. Since that bottom, the global flow of capital still is kind of equal, so there's not one area of concentration. And the reason that is important is because we're going into the seasonal cycle. We anticipate some type of top in January. This chart here says it should be around January 6th. I don't hold it to the date. I'll look for a pattern to confirm that.
That's interesting because that's Monday.
It is. It is next Monday, suggesting the market moves lower into the end of the month. That's the normal cycle. The problem is I've got all of these different topping signals for all types of time frames, for indices, for sectors in the S&P 500. Even the yearly chart is showing a topping signal pattern for me. So, folks, what I want you to do is stay tuned to Tom, stay tuned to all of the shows out here, because even though I'm anticipating that 2020 could be the year of the bear, I'm going to wait for the market to prove itself to me. So I want everybody to have a happy new year, and we'll be back in 2020.
That's a beautiful thing. And folks, just go to our website at TFNN. You go to newsletters, you'll see Mastering Probability right there. Steve, have a great one, safe one. Of course, look for the show tomorrow, and happy new year, man. Let's make it a great 2020.
If you're not currently using the TAZ Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAZ Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAZ understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAZ Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAZ Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhoades at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 147. We get the Nasdaq off 49. S&P's off 12.5. Now, listen, this is pretty intriguing. You know, we know that the baby boomers are basically getting older. This is the first year. This is pretty intense, actually. So, the past year's population growth in the United States was the slowest in 100 years. Check that out, folks. We'll go to Japan later, but this is pretty. Increasing jets and the slowdown of international migration, according to the figures released today by the U.S. Census Bureau. The United States grew from 2018 to 2019 by 0.5% or 1.5 million people, with population standing at 328 million. That's the slowest growth since 1917 to 1918, when we were in World War I, which a huge amount of people died. The first time in decades, the natural increase, the number of births minus the number of deaths, was less than 1 million in the United States due to its aging population of baby boomers whose oldest members entered their 70s within the past several years. So let's see what states are declining too. Okay, so with the aging population of baby boomers, as they move into the 70s age, there's going to be a higher number of deaths. Of course, we have that. That means proportionally fewer women of childbearing age. So even if they have children, it's still going to be less. 4 states had a natural decrease. Now, these are the 4 states that the deaths outnumbered the births. You had West Virginia, Maine, New Hampshire, and Vermont. That's pretty intense. You get the 3 states out of 6 states in New England, Maine, New Hampshire, and Vermont. They're all beautiful states, but the bottom line is that no one's moving to them, evidently. For the first time in a decade, Puerto Rico had a population increase. They increased by 340 people between 2018 and 2019. International migration to the United States decreased by 600,000 people, dropping from 1 million in 2016. 10 states had population declines in the last year. Here's the 10 states. They include New York, Illinois. So New York lost 77,000 people, and Illinois lost 51,000. Virginia, 12,000. Louisiana, 11,000. Connecticut, 6,200. Mississippi, Hawaii, New Jersey, Alaska, and Vermont lost 5,000 residents. These are big numbers, folks. This is what ends up happening here, too, that congressional seats based on census. So there's a lot of ramifications inside states when they actually do lose people, period, or gain people. The South saw the largest expansion growth. That went up, let's see, 0.8%. Natural increase from people moving from other states, there's no doubt. The Northeast lost 0.1%. Let's see, the Monday's population estimates also offer a preview of which states, here it is, all right, may gain or lose congressional seats. So next year is when it gets done using proportional figures from the 2020 census. That will divvy up the 435 United States House seats among the 50 states. Several forecasts predict California, which is the nation's most populous state with 39.5 million residents, will lose a seat for the first time. Texas, the second largest, most popular state with 29.9 million residents, is expected to gain as many as 3 seats, the most of any state. It's a lot of numbers, man. There's a lot of seats to gain. Bottom line, though, is that you can see how this whole thing just shakes out when you're talking population, and it's a monster number. One of the largest problems, of course, that Japan has had forever, not forever, for a long period of time, is that their aging population has been going down pretty dramatically. In fact, when we do the next break, I'm going to get this in the break, because when you see these numbers are like exponential as to the negative contraction in population growth in Japan. And that's one of the main reasons why they've been in negative rates for so long, because also their savings rate is so huge. But the bottom line is that they don't spend their money. And guess what, folks? Your cash flow flowing through the system brings gross domestic product higher. XAU, HUI, what do we have? The XAU out here is up $1.93. And if we take a look at this on a monthly basis, what you're going to see is that we just going up, and we're at 107.03. The break of this consolidation that we've been in since 2013 is 114.71. So you get 7 points away from a break top side. The gold bugs index set up the same way. If we take a look at the gold bugs index, pretty amazing when you're taking a look at the gold bugs index also. We pull this baby up, pull this back. Gold bugs index, we're 241, and 286 is the break top side. You know, we just talking with Steve, and we're talking about gold in different currencies. The currency, this is what's right, because we're in the United States. If you, and this is, you know, to me, this is what also is driving gold. There's no two ways about this. What you have, I've got the continuous contract up here, and what you're going to see, folks, is this is why a lot of these equities are, you know, basically they've been taken off like a rocket ship, is that what you're going to see is that when we take this and I put this on a longer basis, I'm going to put this on a 15-year chart, and I just go from, okay, so our high in U.S. dollars in the gold market is $1,920. We're at 15.18. Now watch this. This is where this gets intense. So if you're an investor in Canada, guess what? You already blew away the all-time highs. You know, Canada right now, we're trading at Canadian dollar-wise, you're somewhere up there at 1982, and that high was 1902. You go to Australia, watch this one. This is like intense. You're way above the all-time highs. The all-time high in Australia was 1827 Australian dollars. 4 months ago, you hit 2,307 Australian dollars. And even if we go to the euro, what you're going to see is that the euro also busted its all-time high 3 months ago. Let's give that a second to settle in. So the euro, we hit 14.15 euros, and the high was 13.88. So there's no doubt that's pretty intense, but it's the U.S., it's the dollar that is so strong. And so this is what's so intriguing about how this break in the dollar is happening. So if we pull this dollar up for a second, we take a look at it, what you're going to see out here, I'll bring this back, what I said, it's 2018, and what you're going to see is that you're going to see the break with conviction here. And this is only the beginning of the week, but the bottom line is that, oops, wrong one. Not wrong one, just. So you want to put this on a 3-week, you can put it on a 3-year weekly chart. You can put it on any type of chart you want, but I'm just saying that what I'm doing right now is I got it on a 3-year. And what you're going to see, you know, you came down the week of December 13th. That was a vicious downdraft, okay? Went from 97 to 96,500. Bottom line, you're breaking this right now, and I expect that the rest of the week we're going to break it, and you'll have a break with conviction, and that sets up on a longer basis an $88, and we're at 96 right now. Stay right there, folks. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow is down 173, NASDAQ up 58, S&P's up 15.5. We're talking about population count. First time that we saw a decrease in 100 years. Pretty intense, no doubt. Japan, now listen to this. This is pretty intense, man. So Japan, folks, this has been the 8th year in a row that they've had a decrease. So the decline began in 2011. In 2011, so here's a couple stats. The decline began in 2011, and it's been going on continually since, about 250,000 a year. That's how what's happening right now. It's not a lot, but when you start adding it up, it is, because this is some of the estimates coming out of there, is that in 2014, they had 127 million people. That is expected to shrink by 16% in the next 20 years. That's they're just taking the age demographic of where people are right now. And then there's going to be really a monster, another acceleration down from 2040 to 2050. It's pretty intense. It goes from 2014 to 2040, it's 16%. But then in an additional just 10 years, from 40 to 50, it goes down 24%. So it's 24% from 2014 all the way. So that's a rough situation. And what does happen is this. This is where you can see that we are in a negative rate world, a deflationary world. You can see why Japan is in a deflationary deal and it can't get out of it. Because what happens is this. So picture this. I've been in Florida now 22 years, right? That's hard to even comprehend. What happened is that if you grew up in Florida and you're in any type of business and you're a worker, my take is that it would be pretty hard not to do really well. And this is why. Because if we go back 50 years in Florida, you don't even have to go back that far, okay? But you go back, let's say you go back 50 years. What happened is that, of course, air conditioning came in, people, middle class start moving up, people start moving to Florida. So what you have is that you have, I don't care what business you're in, Just it could be mowing, it could be manufacturing, it can be whatever it is. As you get more demand, right, people coming in, then supply, then people opening businesses because you get a brand new frontier, well, your probability goes much higher that you're going to be successful because your scope of customers continually gets bigger. And okay, now we're going to fast forward to here. And what I've seen down here is that people that are here for a long period of time, bottom line is that they've done not only just well, they've done extremely well because of that fact. Now, that's still happening. The cool thing about Florida, I tell, you know, even parents up north, if their kids want to go to Florida, man, go to Florida. I mean, it's that cut and dry. People are still moving here. Your probability of opening something and being successful, I would say, is much higher than coming out of Boston. I know Boston well. I know New York well. I mean, New York has so many people. If you're out there hustling, you're gonna. That's a different ball game, I'd say. But you get the gist of it. The gist of it has to do with the amount of people, customers, as you're pushing product. You know, so it's going to be intriguing watching how this whole thing shakes out. And then the real kicker is going to be the more people you have, of course, the more cash flow there is. All of the above. So the amount of debts versus births versus immigration is crucial to these states, and you're gonna see this thing. You know, we'll see it fight out somewhat. I suspect that's going to give folks a little heads up that this was the first time in 100 years that we even. Let me just see this thing again. Yeah, the slowest. It's not that. It's just the slowest in 100 years. You know, it's not a negative. I don't expect we're going to go into a negative. This has nothing to do with going into a negative. But guess what? Slow birth, slow population growth is a big deal. No two ways about that. Walmart. Let's go see what good old Walmart did over the Christmas holidays here. Walmart still hanging at highs. You got 119.41, and you know, you get the spike high up there, laying out there at 125. Walmart is going to be coming out with their numbers. Let's see. Come on. Oh, February 18th. Hey, that's quite a bit away from here. So here, let me show you something else too. McDermott, MCD, McDermott. This oil patch is still in trouble, folks. You got. Let me pull the oil contract at McDermott. Let's see. Okay, so this equity here. Now, this equity here, it already told people they were going bankrupt. And then for some reason that, you know, so this equity is trading at 63 cents. It's down 86 cents today. They had to stop the equity from trading about a half hour ago. They had run, if we go back, this was at 55 cents. They ran it all the way up to 175. It was 175 out here today. Bottom line, it's just 63 cents again. Folks, don't get your head wrapped around any of these that, you know, have basically, this company had already said that, you know, bottom line is that they're going, you know, they're talking with people. This was like months ago, 3 or 4 months ago. And sure enough, so then it comes across today, McDermott is in bankruptcy talks with lenders. That was at 3 o'clock this afternoon. They had to stop the stock from trading. Bottom line is that, you know, this has been on a one-way move down. You know, oil is hanging up at that $60 level, but guess what? It's too late for this equity. You know, this equity going back in just beginning of January of 2018 was $27, just 63 cents. If you want to go back to 2007, 2008, you're talking about $103 equity that is down to nothing. And, you know, one that has come off the bottom that, you know, I would still, you know, watch out for is RIG, Transocean. Transocean has just gone from 350 to 684. And this one here, this has to show me, it has to take out a swing point, you know, before I would say that, okay, it has a shot. 665. So we just took out the first swing point. We actually just did this week, today. So we'll see what it can do. It took out the swing, though. It doesn't have the volume, but bottom line, it took out the swing. The reason I'm saying that is this. What I've seen is that you can have these downtrends go on, and you get big bounces, but you got to remember something. A big bounce out of a vicious downtrend, you know, like rig started out at $163 and then it got to $350. It doesn't mean that it can basically survive if it can't take out a swing on the way back up. Now it's taking it out. We'll see whether it can get up into this 979 and get any strength. Right now, it's a weak takeout, but it is a takeout. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhoades, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome, folks. Dow right now off 179, Nasdaq off 62, S&P's off 15.5. What you're going to see out here, it's going to be light volume, folks. You do have one more day. You have 480 million right now in the NYSE. They'll throw in a couple $100 million, though. There will be about up at about 650 inside the NYSE. Inside the composite, we're going to be you're going to have some volume. You're going to have a couple billion shares. So I suspect what you're going to see out here, bottom line is that tomorrow also you're going to have holiday trading. What you're getting out here today is there's no doubt, bottom line is that if you're going to swap your winners or losers around, guess what? You have today and tomorrow to do it. Specifically, what I mean by that is that the action, if you have a couple losers out there, well, you can sell a couple winners and you offset that. So the bottom line is that you're not paying any tax on the winners. And that gets done on a continual basis, no doubt about that. This is nothing of what could get done. Bottom line, then what we have, you're kicking into the new year, of course, you're kicking into window dressing. What I expect we're going to see out here is that broad trading starts once again January 6th. That's how this baby is lining out. What we did have last night, you know, the Chinese market, the Shanghai market wants to move. If you take a look at the Shanghai market, what you're going to see last night, this thing is getting to the top of its range. And if you happen to be watching Tiger TV, you're looking at all this green out here. It was only up 34 points. That being said, however, is that this is at the top of its range right now. And the top of that range, it has some volume. It's been in this range since the downdraft of May. So it looks to me like the Shanghai is going to probably run to this 32.28, you know, which basically is about 8% higher than we are right now. And it shouldn't take that much to actually get up into that area because of the fact that you have been consolidating for such a good period of time. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need, folks, is right inside you. Might as well have a blast with it. Come back and visit us tomorrow morning. Larry Pesavento kicks us off. Last trading day of the decade, 9 o'clock in the morning. Have a great one, folks. Have a safe one.